This video is going to show us how to extend our balances from the trial balance over to either the income statement or balance sheet section of the worksheet. So here is showing us 6-3, extending them to the balance sheet, and it says a financial statement that reports assets, liabilities, and owner's equity on a specific date. All of the accounts on the worksheet that are above the income summary account. So if you remember back from my first video, I said that income summary is kind of the cutoff, and everything above that from line 1 down to usually 10 or 11 is the assets, liabilities, and owner's equity. So all of the amounts here are going to be extended over to the balance sheet. So if there's nothing blocking its path along this whole row, we're just taking it from the trial balance debit, so the cash is $25.97, and we're plopping it into the balance sheet debit. Same thing with petty cash, bringing over the 100, both accounts receivable, bringing out the amounts. Now, our first one that has a blocker is the supplies. So we started out with $620 in the debit. We have a credit of $530. So because we have one debit and one credit, just like when we post, opposite subtract. So we're going to take the $620, subtract the $530. It remains a debit balance of $90. So this is basically our beginning balance minus what we used, and now what we have on hand is left over here in the balance sheet. Same thing for prepaid insurance. And then our liabilities and our capital all have a credit balance, so we bring them over to the credit side of the balance sheet. And then our drawing is a debit, so we bring that over to a debit. So all of those things are extended to the balance sheet. So we're going to get started on our Aplia problem. So here's our 6-3 work together problem. We have two parts to this, extending the balances and then calculating our net income or our net loss. We're still with Fix It Now Company in April, at the end of the April month. So here's our heading, here's our trial balance that we already did, and our adjustments that we already did. So what we have to do is take all of our amounts from the trial balance and extend them over to either the income statement or balance sheet. Remember, this income summary is our divider, so everything above income summary is an asset, liability, and owner equity, and they go into the balance sheet. So if there's nothing blocking its path, we just bring the balance over. So for cash, we just bring over the $4,900. Petty cash, $75. Accounts receivable, $1,387. Now for the supplies, we have a blocker in the path. So we have a debit of $228, our beginning. We have what we used of $153 is a credit, so we subtract, and the balance is $75, and it remains a debit because the debit is the larger one, and it's the normal balance of supplies. Same thing with prepaid insurance. We have a beginning balance of $375. We have what we used of $125, so what does remain, we subtract, and we get $250. Our liability is a credit, so make sure you put it in the credit column. And our capital is a credit as well, so keep that as a credit. Our drawing is a debit of $1,700. So back to our notes for this section. So we're going to extend the amounts to the income statement accounts section on the worksheet here. So an income statement, a financial statement showing the revenue and expenses for a fiscal period. All of the accounts are below the income summary. So income summary was here, and everything below, which includes sales, which is the revenue, and all of our expense accounts. So here's our income statement section. So our sales is the first one. We have a credit, and we extend it over to the credit for the income statement. All the expenses are debits. So these from advertising all the way down to equipment are debits. We extend them over. Starting with insurance, though, there's nothing in the trial balance, but we have a debit in their adjustment, so we just continue to carry that debit of $150 over, which became the expense from our insurance. Miscellaneous is a debit of $45, and then the supplies expense, same thing. We have an expense of $530 in the adjustment column, so we must bring that over to the income statement. So we're back over to the 6-3 work together, extending everything below the income summary over to the income statement columns. So we have sales here, that's a credit, and it's hard to see the column, so just make sure you scroll, but we have income statement credit. So we're going to put the $21.60 there, and then all the rest of these expenses, including cash short and over, are all debits. So $460 here, $6. Because there's nothing in insurance expense to begin with, but we have a debit of $125 here. We have to carry that. The $189 for miscellaneous. The supplies, nothing in the trial, but we had a $153 adjustment, so that goes to the debit, and then the utilities is the $550. So now we have those balances completed, or brought over to the income statement. Once we've carried all of those over or extended them to the balance sheet and income statement, the last section here says total each column. And this is where you have to be very careful using your calculator and adding these things together. So in our income statement, we have a debit and a credit column. In the credit column, there's only one number there, so that's pretty easy to add. So we can just carry down the $2160. But we have to add all of our expenses here to come up with a number. And that should equal $1483 once you did the math correctly. And then we have to add our debit column for the balance sheet and the credit column for the balance sheet. The credit column is a little bit less, but we have all these numbers to add up for our balance sheet. Debit column, that should equal $8,387. And our credit column should equal $7710. So these won't match when you add them together, but there's going to be a little secret way of knowing if you got it correct on the next step. Okay, now we've gone over to part 2 of these 6-3 work together, and it says to calculate net income or net loss. So everything is done. Our totals from the last section are listed here. So now we have some information that we have to calculate here. So the first thing that we're going to do is look at our income statement. We have a debit and a credit. So remember, our credit is our sales and our debit is our expenses. So we want to have our sales higher than our expenses to know that we have a net income. So we're going to basically take this number of sales and we're going to subtract our expenses. I'm going to get our calculator out here. So we have 2160 and we're going to subtract 1483 and we're going to get $677. So we're going to plug that number in underneath the expenses, $677. Then we're going to do the same thing over here. We're going to subtract the big number minus the little number here on our balance sheet. So here's our balance sheet columns. So I'm going to take the 8387 and I'm going to minus the 7710. And I should get that same amount, 677. So you know we did that correctly. So we're going to plug that 677 under the smaller of the two. And then we're going to add these things back on so that the debits and credits in the income statement will match and the debits and credits in the balance sheet will match. So the 1483 plus 677 should equal that 2160. 2160 plus 0 is 2160. 8387 plus 0 is 8387, and the 7710 plus the 677 should be 8387. So that, again, the debits and credits for each column will match one another. And the other thing that we have to make sure we do is put in whether we have a net income or net loss. In this case, we have a net income. How do you know? Because your sales are higher than your expenses in the income statement section. So this concludes our 6-3 work together problem. Go ahead and do the on your own.